US dollar, long considered the ultimate safe haven, is now in trouble. It's down over 11% this year, and global investors are dumping it at a pace we haven't seen in decades. China alone is selling $25 billion worth of US Treasuries every month, and this isn't just about currency charts. This is about whether the American economy model is losing its grip on the world. Today, we are breaking this down, why this is happening right now, what it means for you, and whether we are watching the beginning of the end of the dollar dominance. Let's start with the numbers. The US dollar index, which measures the dollar against other major currencies, has dropped nearly 10% since February. Normally, when US interest rate rises, the dollar should get stronger. But despite higher yields, investors are still selling. That's massive red flag. Investment banks like Morgan Stanley and JP Morgan are now warning that dollar could fall another 9% by mid 2026, reaching level we haven't seen since the pandemic crash. So what's driving this? Trillions in US deficit spending and a record $37 trillion national debt, political gridlock in Washington and no clear plan to rein in spending, and growing fears that America's fiscal mode is being unsustainable. But the biggest headline, China's historic sell-off. Beijing has been steadily cutting its US Treasury holding, now down 45% from their peak in 2023. And July marked the lowest level since 2009. This is not a short-term move, it's a strategic shift. Why? Geopolitical risk. After the US froze hundreds of billions of Russia's reserves in 2022, Beijing fears Washington could do the same if tensions rise over Taiwan. Diversification. China is buying gold, euros, British pounds, Swiss francs, and even commodities to protect its reserves. And monetary sovereignty. The goal is to be less dependent on the dollar and American monetary policy. And China isn't alone. Other countries are watching closely and beginning to follow suit, moving towards a multipolar reserve system where the euro, yuan, and gold play a bigger role. This is more than just a China story. Foreign demand for 10-year and 30-year US bond is at an all-time low. That means Washington will have to pay higher interest rates to borrow money, which worsens the debt problem. Meanwhile, the labor market is cooling, jobless claims are rising, and Wall Street is pricing in up to 175 basic points of Fed rates cuts next year to stop a slowdown. Put simply, America is being forced to borrow more at higher cost just as global investors are walking away. That's a dangerous spiral. So why is this all happening this year? 2025 is a perfect storm. The BRICS bloc is openly discussing a new reserve currency alternative. Rising trade tensions and tariffs are shaking investors' confidence, and record US deficits are coinciding with global demand for safer assets outside the dollar system. So what does this mean for ordinary people? A weaker dollar can mean more expensive imports, higher inflation, and potentially slower economic growth. For investors, it means US assets may no longer be the safest bet. Diversification is becoming key. For the rest of the world, this could accelerate a historic shift towards a multipolar financial system. So is the dollar doomed? Not immediately. It's still the dominant reserve currency with deep capital markets and unmatched economic scale. But cracks are showing. But once confidence is gone, it's hard to get back. If history teaches us anything, financial empires fade gradually before their decline accelerates. The world is watching and recalibrating. Thank you for watching.